Imagine this. It's 10 years from now and you're living alone. You're no longer bound to the 9 to 5 grind, not scrambling to cover bills, and definitely not wishing you'd started saving sooner. Instead, you're traveling, you're relaxed, and the best part? Your money is working hard. But what if I told you that future starts today? If you're between 18 and 30, now is the best time to invest in your... Investing is the difference between living paycheck to paycheck. You'll get the basics on how to start investing, what it can do for you, and the mistakes to avoid. Let's dive in, because every minute you're not investing is a minute you're losing. Act 1, the foundation. Think of investing as building a bridge, and if you're wondering, why not just save in a bank? Here's the hard truth. Inflation is eating away at your savings. Every dollar you don't invest today is a dollar worth less tomorrow. But don't panic, because here's the good news. Investing in your 20s or early 30s means you have years for your money to grow. And that compounding effect? We'll get into that, but it's more powerful than most people realize. Act 2, strategy and discipline. But before we get into the money-making part, let's talk about strategy, because not all investments are created equal. Investing stocks, bonds, and index funds. Imagine trying to cook without knowing the recipe. You wouldn't throw random ingredients in a pot and hope for the best, right? Or would you? Stocks are like tiny pieces of ownership in companies. With them, you get a front row seat to some of the most innovative companies on the planet. But with great rewards come great risks. Bonds, on the other hand, are like loans you give to governments or corporations, lower risk, but with smaller returns. Then there's the hybrid, index funds. These are collections of even if one stock falls, others can keep you afloat. Think of index funds as a diversified portfolio wrapped in a single, easy-to-manage package. But picking the right mix of these isn't enough. To truly succeed, you need consistency and patience. This is where most people falter. They get excited, maybe even buy a few stocks, but within a few months, they're either bored or anxious. Here's where discipline becomes everything. Investing isn't about quick wins. It's a marathon, not a sprint. And if you're consistent, the rewards come over time, quietly and powerfully. But consistency alone isn't enough if you fall into some of the most common investing traps. Act 3, avoiding common mistakes. All right, let's talk about the elephants in the room, mistakes. These are the pitfalls that catch new investors time and time again. Ever hear someone say, "I'll just start investing when I'm older"? That's like saying, "I'll just start working out when I'm fit." It's backward. One of the biggest mistakes? Trying to time the market. Even seasoned investors struggle to buy low and sell high. If you keep waiting for the perfect moment, you'll watch opportunities slip away. Another common pitfall? Going all in on trends. Think crypto, meme stocks, or that next big thing everyone's talking about. Yes, it's tempting, but remember, investing is about building sustainable wealth, not chasing hype. The third mistake is pulling out too early. When you see losses, it's natural to feel a gut reaction to sell. But patience is the backbone of successful investing. The market will have ups and downs. That's a given. But staying in the game is what separates successful investors from those who quit early. And speaking of staying in the game, let's talk about the magic that happens when you let your investments grow over time. If there's one secret to wealth, it's this: compounding. Think of it as a snowball. It starts small, but the longer you let it roll, the bigger it grows. The gains on your initial investment start to generate their own gains. Eventually, those gains surpass what you put in. This is the power of compounding, and it's what makes the difference between a life of financial security and a life of financial dependence. Time in the market beats timing the market every single time. So, still think investing isn't for you? You have two choices. Let time work for you, or let it work against you. So, start today, even if it's just $50. Your future self will thank you. Now, if you're intrigued by compounding, you'll want to check out my next video on the power of compounding to see exactly how this can work for you. Click the video on the end screen, and let's dive deeper into building the wealth you deserve. See you there.